Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
I'm Will.
So, you guys, last week we had the Fed Reserve come out, Jerome Powell come out with their next policy statement, their rate hike, and their press conference. A lot of things I heard were similar. There's a couple things I heard that were a little bit different. So let's dive into this. Talk about what did they say, number one. Let's talk about what that means for people in mortgage and real estate, number two.
And for people who are buying their cars.
And
have credit cards.
That's right.
And have savings accounts. And are looking to get into debt.
Right out the gate. Yeah, all of those things are going to be...
All that and more on today's episode of Mortgage Heroes Podcast.
Oh, my goodness.
All those directly impacted right away, right out the gate. So,
That's it.
As you've probably seen by this point, the Fed came out with their most recent rate hike, which was another 0.25%. That takes the Fed rate range from 5.25 to 5.5. And Jerome left room. This is one of the biggest takeaways I had from my notes is he left room for there to be even yet another rate hike or a pause in September based on the data that comes out between now and then. The caveat is he had in the previous meeting said, well, we might have to have 2 more rate hikes this year. So it was kind of baked in that maybe he'd have one in September, but then there's like this market reaction that maybe they won't because he kind of suggested we'll see if the data lets us pause. I don't know. What do you guys make of that?
It's going up. We're going to get another right here. That's it. It's going to happen.
I think what happens is it slowly starts to trickle in as the weeks progress. So, rates maybe are holding right now, but we'll feel it in the next couple of weeks as everything kind of just takes the market. Yeah.
And it was interesting because the market reaction on the day of the meeting last week was like mild, but then like Thursday after that, mortgage rates went crazy. Then the market kind of ended.
Yeah, well, that day, the market performed good.
Yeah,
right?
The other day we lost 50 basis points.
And
we caught some back, and then we've been tottering up and down.
Yeah.
It's hard to understand, guys. I'm telling you.
Yeah, and I think an unsaid part of this story, even as it relates to mortgages, is that they're not in control of it. Number one, like this idea that the Fed can control inflation, I'm really losing confidence in that because it's not up to them solely. Number one. Number two, there's way too many market factors and variables that go into the inflation storyline. And number three, specifically the mortgage-backed securities market is not yet defined wholly by their policy. It's encapsulating everything.
Yeah.
I think you make a good point. I don't think that they have their hand on it. I think they were just dealt that responsibility to, take care of this task. But at the same time, it's so intertwined with so many things in the economy, with the consumers, with company spendings, with jobs, with the income. So it's really them just reading to us what the economy is doing and letting us know what they're doing about it or how they think they can have better solutions for what's occurring. But in reality, we as people every day, what we're doing, how we're doing it combined is what really dictating the economy. So if you want to see change, you're going to have to see everybody change if you want to see the changes that we want.
But it's cumulative
it's difficult.
Effect.
Yeah, here we go. Unemployment at its lowest.
Right.
Job creation, it's at its best.
People still spending money. Like it's just they're saying one thing, but the consumer's still yet to feel it or show signs that it's what they're saying.
Well, and so that's a good point because that's one of these things where it's like it's this haves and have nots. Like how is it still so resilient yet the costs of it maintaining resilient have become even more higher pressured on the person spending money. Like it's become more expensive to do almost everything.
Absolutely.
But this resilience is coming from somewhere still. Yeah. So they clearly think there's more in the tank that the consumer has to tolerate. And even the consumer is admitting, with consumer sentiment being high, that it's even higher now than it was 6 months ago.
Yeah.
So it's part of me honestly has a hard time digesting some of what they're saying. And yes, they're reporting out what they know. The other part of me is just like, this is wild because I actually don't think that they're going to be able to do what they're trying to say they're going to do.
Yeah. No,
I really don't. I'm sorry to say that on the show, guys, but I'm losing confidence that they are going to be able to affect the outcome that they want.
I have none.
You have confidence?
Here's a cool thing that I read the other day was the good news, okay? The good news, the Fed doesn't expect a recession. The bad news, and it's just a question mark. Well, what is it? Yeah. Come on now. Like, where are we going with this, guys? Where are we going to head? How do we control this? And how do we move forward when I thought we were in a recession? We're not in a recession. Like, Fed, please, let's get it together here. What are you announcing here?
Bad news is housing.
Housing.
The bad news is housing.
Always.
Housing is getting clobbered right now. Talk to me a little bit about that.
Well, the housing is getting clobbered really in some areas. In our area, it's just because, again, simple economics, supply and demand.
Yeah, right.
Right? And here's the other thing that I found interesting. We're telling our kids, guys, get skill training. Go out there and just go to school, get your degree, get all this. But here we are, construction. Remember back in the day when my dad and, my mom and all of them, they were construction. Like, people would go out there and actually work on homes, work on buildings, have all these contractors to go out there and do construction. Take a look at it now. My son, none of my kids ever said, hey, I want to go to work in construction.
Yeah.
Nope.
If you really think about that.
Right.
And I think that's, moving forward, that's going to be a challenge that we're going to be facing.
And an opportunity. It's a challenge on one side, but the skilled labor demand is going to be in high demand because it's like you were talking to me the other day about your car at the mechanic. It's like, okay, well, we need a mechanic to put brakes in the car, still change the oil, with service the air conditioning and all that kind of stuff. So, and then we, a couple shows ago, talked about the AI situation, how AI is making its way into the workplace and corporate America and all that. Like, there's a lot of change happening at the same time in and among this housing conversation, the Fed rates, AI, and really demand for labor and what kind of labor is needed.
Exactly.
By
I know
people.
AI isn't going to weld something.
No,
So there's a lot of
Yeah.
there's a lot of opportunities for trade workers and trade skills to be picked up, and people don't know, and especially younger generations, that they feel that they need to be an entrepreneur, they need to be a doctor or a lawyer. You can be a trade worker and make six figures. And you can be a contractor and then build a whole company off of that. It's just literally the stigma that they have on that industry that, oh, you're a blue collar worker. Well, some blue collar workers way more than white collar workers. It just depends on
That's true.
what works for you. But tying it down to to the real estate market, I honestly feel with the rates and everything happening, we can't really control the direction of where they're going to go. All we can control is our situation and the decisions that we make. So if you're looking to buy or you're looking to get in the market, assess your situation, your positioning, and what you foresee happening in the next couple of years. Because whether the rates are up or they're down, if you can afford the monthly payment, that's all that really matters, because you can refinance down the line, but the monthly payment right now is going to be the biggest caveat.
Exactly.
And the people that I'm seeing buying are the people that have high income, that have low debt, high credit scores, and they have a stable enough income that is allowing them to surpass the bidding wars, the multiple offers, the higher prices. Unfortunately, this isn't a market for everybody to buy. It just isn't. But for the people that do have those situations, like they need a bigger house, they need renting doesn't make sense anymore financially, or their house that's bigger doesn't even need that much space anymore, so they need a downgrade.
And there's life change. There's always life change, 100%. Right? There's death, divorce, debt, things that cause people to do certain things in real estate. But I think we're going to be in that situation. We're talking about high income or dual income, high credit, low DTI, overbid. I think we're going to be in that for a while, guys. I don't.
Oh yeah. Absolutely.
One of the things that Jerome was saying the other day at the press conference that I kind of heard, and it was not in his prepared notes. This was during the press conference Q&A, and he was basically essentially saying that they're ready to do this and hold this higher for longer because the consequence of not doing that has a much worse effect on the economy at large than by some temporary unemployment. So they're leaning on this idea that unemployment as an outcome is better than inflation becoming entrenched for the entire economy for longer than expected. So for us, that means, okay, we gotta keep doing the show. Number one, we gotta talk about what's going on, answer people's questions. We gotta be talking to our realtors, talking to our past clients, talk to our family, talk to our friends, talk to our neighbors, talk to our coworkers, so that everyone knows what's going on. But then honestly, we have to admit that this is going to take some time. This will take some time. There has not been a quick solution into this. There will not be a quick solution out to this.
Especially with all the stats, all the data that's coming out, with the reasoning of why we had another rate hike. The data just doesn't look in our favor. It doesn't look like we're really controlling that inflation.
We look great on paper.
Exactly.
Well, and so much of it is a catch-22. It's like, oh, we're not seeing prices come down in certain segments.
That's right.
Well, I still have to feed my kids. I got to put gas in my car. I have to buy clothes. I have to buy toilet paper and cleaning supplies. So there's still this like staples and core goods spending that's happening even at elevated levels because, it's again, needed. I just said it. It's core and staple goods. So we're not going to get out of all of those things. And each of those things is representative of a company and their own set of employees and their own debt and all that kind of stuff.
So the other day you brought up something about, when they're putting out products, they're skimping them, right? So we went to Albertsons the other day. Michelle got a pickles jar. And I saw it and it looked a lot smaller than the one we had just bought probably like a month and a half ago, right? And I saw it and I was like, why does it look like it's smaller but filled up even more? I'm like, Michelle's like, oh no, they're just, they're adding more so that they don't have the airspace anymore. I'm like, babe. There's only 5 pickles. It's taking a lot more expensive to produce this. They're making it look like there's more in a smaller packaging.
There's 5 pickles, not 6.
But no, but to your point, a lot of the other jars and cans looked a lot smaller as well.
Absolutely.
Yeah.
Yeah.
So, and I think that's, and if you translate that into some other parts of the economy, like I was thinking about car sales the other day.
Yeah.
So if car sales slump and they get slower and prices come down, but the cost to borrow money, to your point, is still higher, well, that monthly payment is the same.
Yeah.
If you have $1,000 monthly payment because you bought a $90,000 car, but then it's a $70,000 car with a twice as high interest rate, it's still $1,000.
Yeah.
So
It's getting more expensive. Definitely getting more expensive.
so we're just like, I heard this great explanation the other day. Sorry.
No,
it
go
was,
ahead.
it's like holding a water balloon. You can squeeze that water balloon on one side and it just puts the pressure over to another side of the balloon,
100%.
but it's all still contained in that system. And like, oh, that's such a great analogy.
Yeah.
Until it pops.
Oh, don't say that. Well,
No, so I was going to say, everybody knows that the Fed doesn't control mortgage rates, right?
Correct.
But
Right.
they do influence them. One thing that I did want to make a highlight on is that if you're looking to get a HELOC or an ARM, that is directly tied to the prime rate.
Yes.
So that is going to get affected in these next couple of weeks. So if you're looking to get a HELOC, act fast because it's going to get a little bit more expensive. If you're trickling in with the ARMs, make sure it makes sense and you get it at a lower rate before they start trickling up, because it is.
that's a fantastic
Yeah.
point, because also, like we were talking a second ago, there's a timing element.
Yeah.
It's not like, oh, I'll wake up tomorrow and the prime rate's going to be lower because the Fed funds rate is lower. No, he's saying that we're going to cut rates when we decide that cutting rates is going to be the right move to make. And then he ended that comment with, and I don't see that happening this year.
Yeah.
So that means that if you need a HELOC now in the month of August, all the way through the end of 2023, guess what? The rate's going to be the rate
That's
from here on out.
That's it.
It's not going to get better because he's admitting they can't make
it better.
the conditions better.
Yeah.
So good point. Thanks for bringing up the HELOC situation.
Yeah, exactly. Pay more.
Pay more on your money. Yeah.
But,
pay more. Or call
but
me.
again, like, let's go back to the construction conversation. Let's say you need that HELOC because you have equity in your house. Your first is super low. We refinanced everybody in the last 2 years to 2.25, 2.5. But you got equity. You need to build that ADU, get those construction jobs, pay for those supplies. The money might be in the house, and it might be only unlocked by the HELOC.
That's right.
Yeah, no, and it just goes to show that if you really want to tap into your equity, there is the ways. It's just understanding, what you're doing. It's not a bad thing if you're using it for the right reasons. So I would suggest you look into that if you really need it, because it's a security blanket if you have it there.
Yeah.
100%.
Well, one thing I wanted to just bring up, with you guys here, especially because you're on the front lines of originating loans and talking with realtors, talking with borrowers who are aspiring to be homeowners, and this whole month-by-month idea. And there's so much economic data that comes out that I talk about on Monday Mortgage Minute, that I'm talking what's on the calendar, what's the impact, what's the Fed doing, how does this impact your money, and all that kind of stuff. But it might be month by month for the Fed, but I really feel like for us that it's day by day. Like, is that me from the sidelines watching you guys and going, oh, it looks day by day, or maybe even conversation by conversation?
No, I think you hit it perfectly. I just got off a conversation with a client, and they asked me, so if we get into contract over the weekend on Monday, will the rates still hold Friday's levels? And I'm like, that's actually a really good question. Unfortunately, the market opens up new every day, so rates are going up and down every hour, every day, and every week. So at that moment, once we get your information, we get the contract, then we can lock and see what pricing that day is. But it is a day-to-day, and that's what I tell clients. The rate could be higher today than it is tomorrow, so it really comes down to the time and place where we get the offer accepted, because then we'll know exactly what the days are.
Yeah.
All we can do now is just basically make sure that we give our clients the upfront information to let them know, hey, it could be a little volatile, so expect rates to range in between this, so that they're not surprised when they see a higher rate once they got from what they got approved.
Yeah, rates change. I mean, in one day, I've seen at least 20 to 30 rate changes.
Yeah.
For the better, for the worse, for the better, for the
we
worse.
get the alerts.
And I get
price for the worse.
that's when I put my cell phone on airplane mode, so I don't hear the ding, 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 because it's just like, I get all the alerts. It's just like, here we go.
Yeah.
So what do you think? I mean, so we're a little bit long in the tooth.
Yeah.
You have more hair than I do. We've been around a long time. We've seen these kinds of things before, even though the set of conditions are different. What do you think this looks like for the rest of the year for mortgage and real estate?
Yeah, I just think with the Fed announcing what they did, knowing that there's going to be another potential rate hike, and way the data's coming out with jobs just being created more and more, inflation being where it's at, unemployment being at its lowest, I really think this is gonna end all the way through. We're gonna go through higher rates, facing it through the year end, and we're gonna still have the same issue with housing.
Yeah.
You
So
know?
the lack of supply and inventory.
Lack of supply, exactly. And, rates again, just increasing and knowing that they're going to increase again. That just puts everybody on the fence once again.
Yeah.
Well, when is that going to happen? And with the home supply being the way it's at, it's just like, well, let me just kind of put some things on pause unless I really need it. Like, for instance, we have a client that's coming from Maryland. He really needs his home. He received PCS orders to San Diego, but he's limited. That same home that he's looking for here in Eastlake, Chula Vista, is not possible for him. It's not in his budget. He will have to commute all the way to Murrieta, which is Riverside,
Whoa.
And he'll be stationed in Point Loma, and so he and his wife will be doing that commute, and that's where it's needed, and that's where they're looking elsewhere to fit that budget. And when the rates go up, guess what that happens? It takes away from that buying power.
Right. Yeah.
And so
100%.
now we have to kind of place people in different places. So
it's not what neighborhood you want, it's what payment can you afford and where is that?
That's correct.
It's like inverse a little bit, but you're describing something I wrote down here is you got to have grit. I think that's what's going to happen is if you're going to get in this market, you got to have grit because there's going to be a separation. I think I've already seen it, and maybe I've just been a little reluctant to admit it, but there's like a separation of people. I think people are somewhat exhausted and tired of all this on some for some part,
course.
and then other people they have this like tenacity, like no, even despite these headwinds and these challenges, I'm going to make it through.
Yeah.
I'm going to go get that house. I'm going to get in that neighborhood. I'm going to make that payment. I'm going to do whatever I got to do because I need to provide for my family. We're having a second, third, fourth kid or whatever it is. I'm bringing in an elderly parent. I need the room. So there's going to be concessions made, and people are going to, I don't want to say make compromises. They're going to make changes in their own conditions to fit and suit what the needs are.
And it's not going to be a compromise. It's going to be a sacrifice. Everything that we do in life, it's going to be a sacrifice, right? And people tell me, should we still buy? Should we wait? Listen, real estate, it's always an investment. If you're looking long term, you're not going to go wrong.
Yep.
And it doesn't matter what the Fed's doing right now, what the things are happening. These things happened before.
Yep.
At that time, money was very expensive because people's salaries and income wasn't as great as it is now.
Yep.
And so we just continue to adjust to these things. But the prices of homes, I really think, is just kind of getting a little out of hand.
No, but I'll piggyback off what you said because it's like pick your heart.
Yeah,
pick your heart. Like if once rates come down, competition is going to go crazy, right?
Yeah.
So what sacrifices, like you said, great word. What sacrifices are you willing to make right now to in the future have the pleasure that you want?
Yeah.
Because right now you get in, great, you hold it. Now you have leverage to use that property you got in right now to then leverage it to get your other property that you really want, and perhaps use that as a stepping stone to get that forever house or the better house that you were wanted. But that sacrifice you make right now is going to set you up.
Absolutely. And you know what's going with these sacrifices now? When I'm starting to see it, me being in this industry, actually going now 16 years, what I'm starting to see from my clients is they're really starting to visualize themselves down the line.
Yeah.
This is, before it was more of an impulse of, I like this house.
Right.
Let me get in there, and I could see myself getting out of this driveway, etc.
Right.
And it's like, maybe this wasn't the place. They didn't really think about it. Now I'm looking at it like my clients that are coming from Maryland, right?
I can rent this.
Hey, I'm looking at long run. I'm looking to retire soon in another couple, 3 years. So I'm willing to make that commute. I've been wanting that nice oasis pool, that nice yard, where now I'm going to be a grandparent because he's at stage in life where he's getting there. So they're starting to see the bigger thing. If I do it here in Chula Vista, that may not happen. That home is going to be selling for that 1.3, 1.5 million, where there it's at 750, 800.
Right.
A lot more affordable for what they're able to do. So I'm seeing that they're willing to make and sacrifice that commute because in 2-3 years, I'm thinking of retiring and I want to enjoy home.
Yeah.
And I think that's a great way to look at it. And just in general, for anybody that's looking to get into real estate, even if you're young, what's your 5-10 year goal?
Yeah.
If you get in a condo today, that's okay. Tomorrow you rent that out, use it to leverage another property.
That's it.
And then wash, rinse, and repeat. So I think understanding your long-term goals is going to set the path clear for, whatever you want to do.
And I love that you said that because I watch you guys all the time and I'm here having these conversations with you guys and meeting off camera and all that. And I see youth and experience. And I know on the experience side, we've been through a difficult time before. And I know I've had a conversation with you about, living through 2008 and 2009, 2010, where, stuff was really fun. Sarcasm included. Sarcasm intended. But being around an environment where we've proven that you can win through that time, I think really matters, because there's going to be a thinning of the herd. There's going to be a culling of how many loan officers there are. There's going to be a culling of how many realtors are, how many professionals are left. And then again, back to the AI thing, you might see jobs in the next 12, 24, 36 months. Some people in real estate, those jobs be changed or even eliminated due to the aids of computer learning and AI. But that youthful resilience that Brian and Brian's clients and Brian's agents bring along with the experience is actually making us better suited for this moment than even I was aware of 12 months ago, because we can blend all that together and come up with solutions and find places where people can live, make a way for them to increase their income, decrease their debt, increase their credit score, and then have that long-term view. You're talking about 5 years, 10 years, 15 years, where they do get to have that dream here in Southern California.
100%. And it's literally like I'm glad you brought that up, because I am obviously the youngest here, but I do leverage a lot of your experiences, a lot of what you has gone through to be able to forecast. I haven't gone through it, but I know that people in my office and in my team have, and this is how you could better your situation or set yourself up to make that jump or, make that thing happen for you.
Yeah. I mean, things are changing so fast.
They are.
Yep.
Change are fast.
And they're going to continue to.
Exactly. I never understood the word pivot so much as I do now.
Dude, it's like move, pivot.
Except for there's no Fed pivot, right? No Fed pivot.
Yeah. Now I know why Patrick Mahone gets paid so much money. He knows how to pivot.
That's right. So, thank you guys. I know that we have to deliver some kind of reality check and pulse of the market and some stuff right now, but I do hold some optimism too. And I talked about that in this week's Monday Mortgage Minute as well, of this, we're built for this. We're built to help people through these times because we've already lived them firsthand. So if someone's having their first experience in real estate in this type of environment, we've already been here before. Yeah. We've got a place ready for you. We've got a seat warmed up, and we're ready to help you win mortgage real estate. So just to hop on board, we'll take you to where you got to go. So
absolutely. Well said.
Thank you. Memo, thanks for being on the show today. Brian, thanks again for your time. And thank you all for watching the Mortgage Heroes Weekly Podcast. Remember to subscribe on YouTube and turn on notifications so you catch every episode. And if you're listening to us on your favorite podcast platform, make sure you subscribe to the channel, and you'll always hear from us every single week. Thanks again for watching, and we'll see you again next week.
Bye, guys.